In a keynote address at the Chartered Institute of Bankers of Nigeria conference, the Central Bank of Nigeria Governor Olayemi Cardoso talked about tackling a range of critical economic issues, offering insights and perspectives on the current state of Nigeria's economy and its future trajectory. Now, the governor, Cardoso, acknowledged the significant economic disruptions caused by the COVID-19 pandemic, the Russia-Ukraine conflict, the fluctuating global oil prices, among other issues. And he emphasized the need for Nigeria to diversify its economy away from its over-reliance on oil, which has contributed to a decline in government revenue and foreign exchange inflows, while also coming up with policies to improve the country's fiscal position. At this point, I'm being joined by Oladipo Ajayi, Head Fixed Income and FX, Chapel Hill, Denham. And of course, he will be talking more to us about this. Oladipo, thank you so much for joining us.
Good morning. Thank you very much for having me on the call.
Now, Nigeria, like other countries, suffered economic disruptions due to COVID-19 pandemic, the Russia-Ukraine conflict, fluctuating global oil prices, and all whatnot. Now, these disruptions resulted in a significant decline in commodity prices and international trade. Without even talking about the economy, of course, it would have an attendant effect on that. Now, government policies in recent times have not also, well, in some quarters, as been said, helped to ameliorate this situation. So could the Nigerian government have reacted better to these international and domestic shocks?
Yeah, thank you very much. I think to a great extent, in retrospect, there are a lot of things that I felt that we did wrongly, that we could have done better. And we actually deploy more of an unorthodox method to actually manage these situations. And that's one of the reasons why we are here. And if you listen to the speech of the CIBN governor, he actually reiterated and actually mentioned it that the last administration, they actually dabbled into areas that is not their expertise. And as a result of that, we now actually found ourselves in this current situation where we need to actually continue to manage the current happenings while trying to actually put a better structure in place to actually ameliorate the issue. So there's a lot of things that we did wrongly, most especially in the area of FX, that in retrospect we could have done better and we would have gotten a better result than what we are currently having.
Okay, now let's look at the oil and gas sector, most especially the petroleum industry. The continuous decline in Nigeria's crude oil production further weakened Nigeria's already inadequate economic diversification, that's according to reports, leading to a decline in government revenue and foreign exchange inflows. Now, despite huge funds budgeted over the years to the sector, the challenges facing Nigeria's oil sector still persists. And you begin to wonder, why is that so? Is it that the different policies and different measures enacted to deal with those attendant issues in the sector were off, or the funds were inadequate, or probably a perception that was wrong, or research that was wrong in dealing with these issues?
I think more of this is more of implementation, because if you look at Nigeria, we have lofty ideas, but the implementation of those ideas are most of the problem of the country. And for the oil and gas sector, you will notice that we saw huge decline, most especially last year, where there was great oil theft in that industry. And at that particular point, when the government actually contracted a private security outfit to actually handle the situation, there are information that came to light that there's some gang that be pilfering, that been stealing oil for the past 10 to 15 years. And you now wonder how come that will continue in that momentum, and yet no one has been able to actually notice this. So it's more of cartel than an individual activities. And I think that is what the current government is trying to find a way to actually get an handle. And it's a situation whereby you need to actually use technology rather than trying to use physical sense to actually combat some of this problem. And another thing is also the policies in that industry. And I don't think that it's actually exciting for investors to actually bring their money into the country. It's alarming that Mobile actually divest from Nigeria. They sold their business to Seplat before it became an issue between Seplat and NPC. And the same movie actually went to Angola to go and invest in a new field in Angola. So it tells you to some extent that there's something in Angola that Nigeria government is not currently putting in place. And I think more policies, because when it comes to business, you need to consider all stakeholders. Nigerian government is not the only stakeholders in the business. Also, the investors and the fund provider also, they're also stakeholders also. So you have to find a situation whereby it's a win-win situation and not and no one is at disadvantage. And I think that's some of the things that the current government also is trying to look at. Because I remember during the manifesto of the current president, he mentioned something like about giving him more like a deeper tax to people that operate in that industry. And what that would do is that it will bring inflow of funds for investments, and they can actually defer the tax into the future. But another opportunity that will actually bring to the table is more employment. And I think it's a lofty idea. So I think it's more about implementing some of those lofty policies. So that can actually attract investors and actually get to keep them in the country.
Now, another area that actually affected the country's fiscal position is the issue of borrowings, securing loans. Now, in the face of excessive borrowings and a debt portfolio rising to over 87 trillion naira, Nigeria still witnessed a growth in public expenditures and a deterioration in macroeconomic indicators. So would you also blame government for having to secure loans to fund the budgets and the expenditure? Because we've heard that there's no government that can run without having to borrow. But then you still consider borrowing for what? Where did these monies go? In what sectors were these monies invested? What were the gains? What were the pains? What were the profits? And those are the issues when we talk about having to secure loans to fund an administration.
Yeah, thank you very much, Lekan. And between you and I, you understand very well that borrowing is not bad. And you actually mentioned it, and you hit the nail on the head that what are we borrowing for is the key things. And if you look at Nigeria borrowing, it's not that we are doing badly in terms of borrowing. Because when you compare our debt to GDP ratio to most countries in Africa and globally, we are ranked lower. It simply means that we are not even very close to most of these developed nations. But what is more concerning to me is the cost of servicing those loans compared to your revenue. In a situation whereby you are using 80%, 95% of your revenue to service your debt bodies, it tells you that there's something amiss. And it simply means that you are not generating enough revenue as you are supposed to. And it also means that those funds that you have actually borrowed, you did not borrow it for capital investments. You did not borrow for infrastructural development. Because if you have done so, you expect to start seeing the effect. Because what that would do is that it will improve your revenue generation. Imagine a situation where the Nigerian government actually borrowed to actually improve transportation network in terms of rail network. So it's easier for farmers to convey goods from their farmland in the north down to the south here, where a lot of consumers actually reside. Imagine that situation. What that will mean is that it will mean that business will operate seamless. What that will mean is more revenue to businesses. What that will mean is more tax revenue to the government. And I think that is the area that is the problem for the country. What are we really borrowing for? Are we borrowing to develop the nation, or we are borrowing to consume? And that is where the problem is. So the government needs to look beyond borrowing to consume. We need to ensure that when we work within what we have on the table for consumption, and whatever we are borrowing should be for capital development. And that's one of the reasons why I so much love Sukuk bonds. Because Sukuk bond, you can actually attribute that particular borrowing to specific projects. And there are many times that I will travel on Nigerian highway, and I will see a poster or signpost showing, oh, this is from Sukuk 3, this is for Sukuk 4. So it means that you can actually trace the rehabilitation of that road to a specific borrowing. I think the government needs to actually toe that line in terms of in terms of infrastructural development. Maybe we should go back to the era of issuing infrastructural bonds rather than just issuing bonds. So when you issue infrastructural bonds, you know that these bonds are for specific purpose and not for consumption.
Let's now quickly talk about Nigeria's GDP growth that you mentioned earlier. In 2021, it was about 3.4%. In 2022, it reduced to 3.1%. Then in the first quarter of 2023, it was about 2.5%, increased a little bit to 2.9% in the the latter quarter of the year. Now, there's a projection that it might further reduce in 2024. What are your own predictions as regards these GDP growth rates? What policies do you think would be key to see how we can improve on the indices?
Most especially, if you look at the GDP growth and you look at the oil sector, what happened in the oil sector? Oil and gas sector actually performed very well compared to what we saw in the last quarter. Although it wasn't in the positive terrain, but when you compare that to what we saw, it was a massive leap from where we were coming from. Because when you look at the last quarter, we're doing about 1.22 million barrels per day, and currently we're already at 1.45 million barrels per day. And the last time the Ajayi was on TV, mentioned that they are working to ensure that by the end of the year we are actually meeting our quota. So what that means that we already will be around 1.8 million barrels per day. So what that simply means for the economy means that we'll actually keep moved into the positive terrain in terms of the oil and gas area. But when you now look at the other side that actually heavily affects, you look at agriculture, manufacturing, you look at trade, and you find out that there's huge impact on those sectors. And then speaking, I won't be surprised because when you look at a lot of things that's happened between June and now, of course, you will so much understand that this is expected to affect these sectors, the manufacturing sectors. A lot of manufacturers are finding very difficult to actually access FS, to actually bring in input to productions in the trade sectors as well. People are finding very difficult to actually trade. Sometimes sometime early Q3, there was a report that most of these correspondent banks are trying to withdraw their line for most of this bank and manufacturing company. So what simply means to them that they cannot actually access this credit line to actually utilize it to bring in raw material for their production. So some of these things added together are some of the things that actually culminate to what we saw at the end of the year. And if you listen to the CIBN governor very well, he mentioned that their focus is actually clear the matured forward contracts. By so doing, what that would do is that it will help some of these people to actually claim their lines and help them to actually be able to go back to some of these their clients to our customers to actually utilize lines to actually bring some of the input productions back to the country. And so I feel that if we can resolve the issue of FX, to a great extent, it will actually impact us positively in the last quarter of the year than what we saw in third quarter. So in the oil and gas, I feel that we are on the right track as we continue to improve production. But the aspect of non-oil sector, we need to improve and actually resolve the issue of FX and at the same time increase the capacity of the country to consume. Because when you look at what drives an economy is the function of the demand and supply. So when there's no demand from people at the same time, and when people don't have the capacity to consume, when the real income has dropped significantly, you expect that to also affect the productivity of that sector.
Okay, let's now quickly talk about the financial industry. Now, despite the challenging global and domestic macroeconomic environment, Nigeria's financial sector is said to have demonstrated resilience in 2023. Do you also agree with that? Because that was what the CBN governor said.
Yeah, I think to a great extent, most of these financial institutions are actually positioned very well. When you look at their books in Q2 and Q2 most especially, you see some of these banks actually declaring over 300 billion in exchange gain. It simply means that they are smart enough to actually sit more on dollar-denominated assets than sitting on naira assets. So this, to a great extent, has further beef up their capacity to actually absorb shock. But the issue on ground is that the capital base that we currently have for most commercial banks in Nigeria is dated back 2003, 2002, 2003 levels, where the capital base was 25 billion. You and I know that 25 billion then cannot be said to be the same as we speak now. Even when you look at that time in dollar terms, I think the $25 billion should be maybe about 230 million dollars, so $230 million thereabout. And when you now convert $230 million in today's exchange rate, do you think it's the same valuation? And one of the things that some of the reasons why we need to actually recapitalize the fact that most of these banks actually transact with international financial institutions, and international financial institutions will actually have to convert your valuation into dollars to actually know whether you have the capacity to actually deal with them. And it's a situation whereby you don't want a situation whereby there is now a restriction to the number of banks that most of these international banks can actually trade with. You need to actually find a unified landing ground for some of these banks, and I think that's one of the reasons why the CBN governor is towing the line of actually capitalizing the banks. And also, if you look at what you also mentioned, that they are looking at within 7-year horizon, they are looking at actually making Nigeria economy a 1 trillion economy. And when you want to create a 1 trillion economy, of course, you also need the financial system to help you to actually work around the financial system will also be the catalyst that can actually bring this on the table. And when you look at the current standing of most of these financial institutions, I don't think they have the capacity to actually create a $1 trillion economy. And that's another reason why they need to actually recapitalize so that they can actually now be in line with the focus of the government.
Okay, now the CBN governor, that's Cardoso, also said that technology will continue to play a critical role in delivering financial services and enhancing financial inclusion. However, in recent developments in the payment services landscape in Nigeria, we've seen concerns being raised as regards the use of technology and the existing licensing and regulatory framework. You're talking about cyber attacks, cyber fraud, and every other activity that deals with financial transactions where people's funds are being stolen and, just disappears into thin air. So what are the best ways to tackle, most especially cyber fraud and attacks in Nigeria's financial system?
I think there has to be great risk management framework around this, and I feel that this is not peculiar to Nigeria. And when you look at a situation, you look at both the pros and cons, and when the pros actually outweigh the cons, so it makes a lot of sense for you to actually embark on such journey. And I think that's one of the things we need to look at it from. We need to look at it from the area of the pro. What are the pros of this? What are the consequences of this? And for me, I think the pros actually outweigh the consequence. And we will not be scared because of what has been happening globally, cyber fraud and all some of those things. And because of that, say, okay, we will not hold our line. For me, I feel that I've heard the CBN governor also mention that even the FX sector, we need to actually digitalize that sector so that there will be transparency, so that you can actually track funds easily. And some of those things are things that some of those things are some of the opportunity that digital economy actually brings to the table. So for me, I think that we just need to actually ensure that all the stakeholders in the business, like the financial institution, they need there should be minimum requirements for them to actually embark on this journey. You need to ensure that they have cyber security offices that actually qualify on ground to actually work with the institution, and at the same time there must be a great risk management framework in place also to actually help to actually mitigate the risk Would there be risk? Of course, but the framework will help them to actually review the risk and also the impact of the risk on such financial institutions.
Definitely, and basically it would also involve having to assess the macroeconomic indicators and look at fiscal policies that would be apt to propel financial and economic growth for the country. Thank you so much, Oladipo Ajayi, Head of Fixed Income and FX, Chapel Hill, Denham, for talking to us.
You're more welcome. Thank you very much for having me on this morning.